Welcome back to the Gold News Channel, ladies and gentlemen. My name is Kerry Stevenson. I'm your host. I today am hosting Gareth Soloway. He's founder of inthemoneystocks.com. So if you want trading tips, you want to subscribe to his channel, that's where you go, inthemoneystocks.com. Gareth Soloway, thanks for coming back. We spoke 4 weeks ago. It was a bit of a challenging time. That was just when Russia was invading the Ukraine. It's still going on, but it seems to have come off the front page. As usual, we have short attention spans, and now it's all about Hollywood slapping and, really seriously crazy stuff. But we're here today to talk about volatility in the market. I'm here to ask you about the oil price, because your prediction is that that's going to come right down. Because here in Australia, it's all anyone seems to be talking about at the moment is the oil price, which is, I guess, going into people's ability to discretionary spend. It's impacting a lot of people. But you're saying not to worry too much. It's going to fold back a little bit.
Yes, correct. And thank you for having me back. Always a pleasure to talk to you. So the key with oil is that, you have to look at it. Number one, Biden announced this morning that he was going to release 1 million barrels a day from the strategic reserve. So right off the bat, oil came crashing down pretty sharply, closing at just over $100 a barrel today. So here on the chart, you can see that right there. And it's a beautiful, this is the monthly chart, but you can see that we're trading back to about $100.69. Now, even from when we were at $120, $130 a barrel, I was skeptical that we were going to see what a lot of analysts were calling for, which was $200 a barrel.
Yeah.
The basics of it from a chart perspective were very simple, right? So if you just connect the high from 2008 to the $130 level and then drop an exact parallel line down, you actually get the exact lows over the last 13 to 14 years. So that right there, charts have a way of kind of maintaining these parallels in them. The other factor was, number one, you have to remember that there's a midterm election coming up, right? So the president is going to do everything within his power to bring that oil price down, because a lot more people will be voting for him if oil is a lot lower. Historically, if you look at price action ahead of big elections, oil usually falls. The next factor that I thought about and why I still think it's going to go lower is that you have a Federal Reserve that is very adamant about hiking rates, probably 50 basis points at the next meeting. The market is now pricing in 8 total hikes this year. That is going to have an effect on the economy. It's going to slow the economy. When the economy slows, people drive less. So there's a lowering of demand there. And just the fact that, when you were at $120 to $130 a barrel, I knew people that were saying, hey, we're not going to drive to grandma's house, 500 miles because it's going to cost us $300 in gasoline. And so you had this demand destruction when we were that high as well. So all of these factors, kind of including the charts, made me say, you know what? It's not going to continue up. If anything, it's going to pull back. And again, we're back to 100 at this point. I do think we continue down.
That's very interesting, because that will have a knock-on effect to the economy. But I just noticed, you mentioned 8 rate hikes in the US this year. That's a lot of rate hikes.
Yeah. And honestly, I don't think they'll do them all. I think it's wishful thinking. It's kind of jawboning right now. They want to kind of start to make the market anticipate the potential for it. But if I'm correct, I believe that they'll get a few rate hikes in by mid-year, maybe into the late summer, and the economy will start to slow quite a bit, and they'll have to step back. And again, historically, if you look at rate hikes, especially over the last 20 years, anytime the Fed hikes, it does have an impact by slowing the economy, which, by the way, then has an impact on commodity prices, especially something like oil as well. So it kind of all meshes together in terms of what I expect with oil, what I think the Federal Reserve will end up doing, and how the economy will be later this year.
Do you think that it's not a bad idea? Do you think the economy needs to be just slowed a little bit? What's your view on that?
Yeah, I think that you're coming out of a pandemic where there's a lot of pent up demand, which is adding to inflation. So I think a little bit of slowing is good. But if there's one thing I've learned from the Federal Reserve is they always go overboard, right? So they panic when inflation is too low and the economy needs a jolt. So they print lots of money. And then when the inflation numbers are high, they tend to overreact and tighten too quickly, which then can spiral us into a recession. And I think that's my biggest fear is, does the Fed miscalculate and hike too much, pushing us into a recession? And then once we're in a recession, history over the last 20 years was, okay, well, they'll just print more money, right? So they'll just go to the printing presses and do it more. The question is, well, with, let's say, even if inflation drops to 6%, can they still print trillions of dollars? I don't think they can. I don't think they can stimulate the same way they have in the past. And then the question is, well, what can they do? Is there anything they can do, or does the economy have to deal with an actual recession for a certain amount of time?
Well, I was about to ask you that very question, which is, back in, I think it was in the 90s over here in Australia, Paul Keating once famously said, the recession we had to have. Do you think that it's time for the recession the world needs to have, just to pull it back a little bit into line?
Yeah, I've always said that the stimulus that the Federal Reserve and the government has pushed into the market is much like a drug dealer with a drug addict, right? So the economy and the markets always want more. I mean, the same amount of money printing last time isn't enough this time. You need the bigger high to get that same amount of movement in the economy. And I think that at some point, the patient dies, right? I mean, whether it's in a hospital or it's a drug addict on the street, at some point you do an OD and the whole system has to come crashing down. And it's a stinky, analogy to use, but it's very accurate in that way. So I do think that you will, just like in 2007, going into 2008 and 9, you could argue that the market had been stimulated so much it needed to really flush out. The same thing for this time. I think within a few years, we're going to be in pretty dire straits for the global economy and the domestic economy.
But a few years. So in the meantime, my beautiful community out there they love gold, they love the precious metals. And we've mentioned this before. Last time you were on, Gareth, we talked about diversification. But let's talk precious metals in this time of volatility and, I guess, people not really knowing what to do and how to protect their wealth. Let's look at your views on precious metals from a charts point of view and what it's telling you. So where should we start? Because we'll do all of them. Let's do gold, silver, platinum, palladium. Where should we start?
Yeah, let's start with
good old gold.
The golden metal. We love gold here. So let's start with gold. It's doing exactly what it should be doing. It had the beautiful pop. And again, if you look at, a lot of people are like, well, why did it stop just shy of 2100? And the answer is there was a classic technical double top, which it hit from 2020, right? So it makes sense that was a stopping point. Off of double tops, you usually get a retrace. Remember, we had this breakout that I've been talking about for quite some time. And I do expect a little bit more downside. So I think maybe a pullback in this vicinity. But that on a chart is very, very bullish. I know it seems weird to think pullbacks are bullish, but it allows for energy to build up. So think about a car who's revving its engine, right? So it's got to kind of pause. And then when it steps into gear, it can really go off to the races. So basically what I'm doing is I'm trying to be patient here, wait for a pullback, and I will add to my gold anywhere between 1875 and 1850, 40 area, and then look for the next move up. And again, if I'm correct and the charts from the 1970s, which are mimicking the charts from the last 4 years are in line, then we should be on the verge of a major move up in gold.
When you say a major move up, is that predicated on the ongoing Russian conflict, or is this purely based on, as you just said a minute ago, it's taking a breather and this is its natural progression, or are there outside forces as well?
Yeah, in general, the charts are paramount, meaning that little blips on the screen can occur from outliers like an invasion of Ukraine by Russia. But for the most part, the chart is alerting you to that ahead of time. Like, for instance, going into that period, you had just broken out just before the invasion. So it was telling you something was going to happen there. And then we got the invasion that really popped it to those highs. So I would be in the camp where that, for the most part, the chart is going to be king. It's telling you it's going to go higher after maybe it settles in here a little bit longer. And that's just, we don't know what extracurricular things could happen. I would say inflation will be stubbornly high, maybe 6 to 8% for multiple years. I think that you'll see the economy start to stutter, and the worries about recession will probably push people into gold as well. So there's a lot of things that over the next 6 to 12 months will really come into play with giving gold the reason to make that big move up.
I guess one of the questions for those of us out there that are listening is, I just want to touch on this. Why are charts so important? Because a lot of investors out there are not chartists. They don't look at charts. They don't understand charts. Gareth, I'd really love your view on why you feel that the charts give you the ability almost to predict what's going to happen, and why it's so important for you to look at these.
Yeah, and that's a wonderfully great question. So basically, when you're looking at a chart, you're looking at human emotion, and remember that charts are formed by buyers and sellers. So when someone buys, the chart upticks. When someone sells, it downticks. And people sell because either they are fearful, right? So they think the stock is going to go down or the commodity is going to go down, or they buy so they're slightly greedy, thinking it's going to go up. So you're basically looking at a representation of a global population view on the market. So if you're a psychologist, I've always said you probably have an edge in trading stocks or investing, because you can read people's psychological narrative in the charts, and it gives you the ability to say, okay, well, if everyone is thinking this way, potentially there's no more buyers. Let's say everyone buys into something. And this happened with Bitcoin at 65 to 69,000, where everyone basically got in thinking it was going to 100,000. Well, when everyone gets in, who's left to buy? Right. And again, institutions weren't getting in at that point. So it just leaves this void where price has to come back in. And I'm a big believer that charts give you a good ability to be a contrarian trader. If you don't chase, if you don't let emotion control you, you can actually game them very beautifully by going opposite the extremes in the charts.
It's interesting. The psychology of investing is very important. Do you think it is important for people to be contrarian investors in a way?
Yeah, I think the most important thing about being contrarian is that you don't get caught offside. So, when a stock or a market, like with nickel, right? Nickel soaring at that one point, you never want to be the person that chases it all the way up there. The hype might be incredible, but you have to be the contrarian thinker. You have to sit back and say, hey, listen, I need to be logical here. Does this make sense? Should I buy it up here? Do I really think it has another 20% upside even after it's run 100%? And realistically, you have to be smart enough to say, well, probably not, or at least there's too much risk at this point to buy. And risk reward assessment is unbelievably important for an investor to take into account.
We will, towards the end, I want to have a chat with you about commodities overall, because we're moving into this electric vehicle revolution, which is, I guess, giving the opportunity for people to have a look at resources, because could be a little bit of a pullback. I noticed that the US market's a little bit softer this quarter.
Mm-hmm. Yeah. So, I mean, it's definitely something that I'm keeping an eye on in terms of the demand for electric vehicles. There's been so much hype that's been developed through the electric EV kind of, future. This is the future situation. And I do wonder if the economy starts to slow and people find that inflation is taking a bite out of the amount of money that they have to spend, can you pay the extra money for a Tesla vehicle? Especially what Elon Musk has said lately, which is inflation is really hurting them in terms of their margins. They're likely going to have to raise prices again and again and again to compensate for that. So again, like a contrarian, when I see everyone saying, oh, electric is the future, I say, okay, I agree it's the future, but maybe you'll have a check back in the chart, just like gold did and pulled back a little bit before that next move.
All right. Well, before we leave the gold chart, your views at the moment is a bit of a pullback to probably mid 1800s before it takes off quite strongly. So I guess the commentary out to my audience out there is, if you are looking at gold, now is a really good time to be adding to your portfolio. Would that be a good way to summarize for you?
Yeah. And I do want to be clear on that, is that, I'm a shorter term trader. So I nitpick, the difference between 1937, where it currently is, and maybe 1875. But if you're someone who's like, listen, I don't pay attention to the ups and downs every single day on gold, and I just like it in the long term, it makes sense to protect myself against inflation, then it doesn't matter if it's here. I mean, if it's going to $3,000 an ounce, well, what does it matter if you paid $25 up or down, right? And again, I think that's also important, because occasionally I miss a trade because I'm nitpicking for the price. So there's always a chance that I'll miss the entry, and that's just the nature of the beast in my career. But again, if you're someone who has that bigger picture, don't worry about the little ups and downs.
Yeah. So longer term, inflation, you think, is probably here to stay. That is going to be a good baseline, I guess, for gold as a way to hedge and protect against inflation.
Yeah, absolutely. And I think gold is a very underestimated and underinvested asset for a lot of fund managers. And I think if you start to see the potential for recession, which would mean earnings for tech stocks, for instance, might suffer, in investment fund managers are going to start to look for beaten down things that haven't seen the same type of runs. And if you look at where gold was 10 years ago, I mean, yes, it's up, but it's not comparable to a Tesla or an Apple or any of these other assets that have really made runs. So I could see a big rotation in capital to more of a protective environment like a gold play.
Do you think they'll also be looking at gold stocks? Because I noticed that Kinross Gold, for example, are shutting down all of their Russian operations. It's interesting what they're doing. They say, look, we're not going to be involved with Russia anymore. That's had a bit of a pullback, what's your views?
Yeah, I mean, just looking at this chart, and this isn't a chart that I look at on a normal basis, but I have to say the chart is not bad. I mean, the first thing that jumps out at me is look at this beautiful trend line where you can basically connect these highs. So right from here to right in here, and we're coming up underneath. So what I would say to investors is you got a nice bullish consolidation pattern here. If you can break above this trend line, which is right a little bit above maybe $6.10, I mean, this could be a nice breakout play in the not too distant future. So it would be a chart that I'd have on my watch list for sure.
Do you think that buying physical gold, the gold price, buying the physical gold is good? Or do you think people should also be looking at gold shares, like for leverage? Do you have a view on that?
Yeah, so I think you want to diversify between the two of them. So the pure play on just physical gold or buying something like the GLD here in the US, which gives you just exposure to gold itself. The beauty of that is inflation wise, you're getting that pure play. When you invest in stocks like Kinross or the GDX, which is the miners, an ETF that tracks the miners, you get more bang for your buck usually, but you also have to remember that the inflation is going to impact the miners as well. So there's a drawdown there. There's a potential risk factor that an investor must analyze for themselves and say, okay, well, how high does the gas cost go for them when they're mining for gold? What about the machinery and all the metal that goes into all that stuff? So there's kind of a give and take there. And that's why I think the best thing is to do just have a little of both.
Little of both. All righty. Moving on from gold, one of the things that there's been a bit of chitter chatter about it, which is silver. The silver price, it's kind of, I guess, been almost tracking a little bit sideways, or your chart will probably say something different. But I know that you're fairly bullish on silver, aren't you, Gareth?
I am not quite as bullish as gold is the pure play on inflation. Silver has that industrial side. So if the economy does start to slow dramatically, then you might have a little bit less demand for silver. But the chart is really paramount here. One thing to remember as a chartist is that the chart is always right? I could have my views of this or that. The chart really is where the truth is. And when you look at the chart of silver, you can see that it has broken out and it is consolidating now. And I would be a buyer around $23.75 to $24 on silver. As long as it holds above this orange trend line, I think you got to like silver for a retest of the $30 level. And I do think that, again, inflation is going to be stubbornly high for multiple years. So the chart is saying buy around here or just a little bit lower. And I think you'll head towards 30 in the not too distant future.
When you say the not too distant future, Gareth, I'm going to ask you about that, because to some people, the not too distant future could be next week. To you, what's the not too distant future?
I would say, year end, for me, it's probably the next couple quarters, something like that. It's so hard to predict exact time frames, so I try to just do, my short term is the next week or two. My midterm is the next few months, and my long term is a year out or more. And I'd say this is kind of a midterm setup. So you're looking at 3 to 6 months out. I think you could retest that $30 level.
Yeah, I need it to start to move really nicely in about May, because we have our Australian Gold Conference in mid-June. So we need to have a little bit of a breakout coming into mid-June. All righty.
Nice.
So kind of more bullish on gold than silver. In the portfolio of precious metals, we also have platinum and palladium. Let's go platinum, I guess, first, and have a look at what the chart tells you about that. Oh, a bit of a pullback there.
Yeah, platinum's had a pretty sharp pullback after running nearly to 1,200. It's back down sub 1,000. First thing I'm seeing on this, and I'm just kind of looking here, and I'm doing this analysis. I don't usually analyze platinum on a daily basis, but this would be a trend line that I would follow right here. And then you have this trend line tracking with the highs here. So it looks like we're into support right down around this 975-ish area, 960 area. So as long as that holds, I think it's a buy. If that were to break, then you could be seeing a little bit more downside. But again, on a technical basis, it's still holding support. So you give it the benefit of the doubt to make a move up. So I think you have potential upside back north of 1100 here.
Wow. Okay. Platinum's a good buy at the moment, ladies and gentlemen, according to the charts. Palladium, which is something that people don't speak about as much, but it is in the precious metals basket. Again, bit of a pullback.
Yeah. And again, the pullback probably, you saw that big pop with the invasion and everything. And then really price has been decimated since then, and it's come in quite a bit. The one thing I'm seeing here is a very clear level at the even number of 2000 that looks very, very interesting as major support. So I'd watch that $2,000 level. We're at 2,264 right now, but I would be a buyer there. You've had a major pullback from 3,400. 2000 would be a big haircut from the highs. It gives a very intriguing entry opportunity on Palladium there.
All right, so Palladium's had a pullback, ladies and gentlemen, so could be an opportunity, but as always, do your own research and never ever put a dime of your money into these crazy markets, because quite frankly, Gareth and I have spoken about this before. It's a very volatile market. We don't want you to lose your money, but we do say that, and I guess you would agree with this, Gareth, is gold is a good hedge against inflationary times, and that's what we're heading into.
Yes. Yeah. And I agree. And I agree with your sentiment as well, is that investors, if you're thinking about investing, you have to understand that, I might say that you're at support, but if that support gets broken, it opens up kind of a trap door underneath where it can take a leg lower. So one of my best techniques that I've developed over time is to leg into positions, right? So everyone wants to make big money right away. I've lost more money trying to do that. So what I do is I say, okay, well, we're at this level. I'll put, let's say I want to accumulate $100,000 worth of gold. I'll put 25,000 in at this level. If it breaks to the next support, $50 down, I'll do another. And you kind of leg in that way, and it kind of protects you from being down significantly on the position. And then always refer back to your thesis, right? Have a thesis. Why are you investing? Gold for me, because of inflation, because of the risks of recession and people wanting safety and security. So that is a thesis that I am in right now. If it changes, I have to be honest with myself and say, okay, it no longer is the reason. My thesis is not valid, and I need to readjust my position.
That's a really good way of having a look at it, Gareth. Now, look, it is the Gold News Channel, but I'd love to get your views, I guess a bigger picture, a more macro view on what you're seeing out there at the moment in terms of threats and opportunities.
Mm-hmm. Yeah. So, the threats, I think the biggest threat is, everyone would probably say Russia and Ukraine. I think that at this point, the market has adapted to that as a risk factor. So it's not a big driver. I think the biggest one is really the Federal Reserve and the economy. I think that you're going to see, again, the Fed try to get inflation under control. But remember, like we said earlier, you can't print the same. So if we go into a recession, what does the Fed do to get us out? Can they get us out? And if they can't, do we see another 2008, 2009, type financial crisis, which I do think is a possibility. So I think that to me is the biggest risk over the next 12, 18 months, that they'll push us into recession and they just can't get us out at that point. And then in terms of opportunities, I think we talked about the metals. I think the metals are a place to be. And I think you start looking at some of the charts on some of these foreign companies, right? I think last time I was on, we talked about China stocks. They had an amazing rally over the last few weeks, something like 50% on something like Alibaba. But wow. But I think it was remarkable type moves. Now they had just flushed, so they were bouncing back significantly. But keep in mind that there are going to be countries that are not necessarily going to have the same issues as the United States, or that aren't going to react the same way. So, you could argue that China, they can stimulate, they don't care too much about certain things. Same thing with South America. And that's where money could rotate. I also think fund managers are very underweight foreign assets, and they'll have to get those back up to snuff. So there are opportunities, but as always, do your research, have your thesis, leg in, be smart, know when to cut a trade when it's going against you, be smart about it.
That's what everybody would like to hear. Be smart about it. Now, Gareth, just before we finish up, How can people benefit from your knowledge? I said at the beginning, inthemoneystocks.com, but how can they potentially benefit from what you do?
Wow. So I think that the best thing is, I have Twitter, and Twitter, if you follow me, I post up some really good content in terms of a chart analysis on various things, including cryptocurrencies. And then also in the money stocks, I have a service there called Verified Investing Alerts, where I basically give out trade signals, and then I do daily videos. And people will tell you that the daily videos are worth their weight in gold because I teach in them. I talk people through the concepts of why is this going to be a level? What's the most likely setup? This chart signal is telling us it's going to have this move. And so it's a whole learning experience. And the same thing with verifiedinvestingcrypto.com. It's crypto signals, but at the same time, I put those signals out and I do a daily video. So learning and education is so important. It can literally change your life. And then you compound interest. When you learn something, you can make money off of it for the rest of your life.
Well, there you go, ladies and gentlemen. He's here to help. And that's what we love, having Gareth come onto the channel, have a bit of a chat with us, because at the end of the day, my passion is to make sure that you do not lose that hard-earned wealth as we go along this very bumpy path. Lots of volatility. Gareth Soloway, always a pleasure. We'll get you back on next month and see where that oil price is headed and what's happening with the gold price. For now, thanks for joining me on the Gold News Channel.